So welcome everyone. Today we're going to be talking about real-world assets, the next big market. And today we have guests Cynthia, Richard, Nathan, and Eugene. So perhaps to start with, would you guys like to introduce yourselves briefly? Maybe Cynthia, would you like to take it away?
Sure, thanks. I'm Cynthia Wu, co-founder and the CEO of Matrixport. So Matrixport is all-in-one crypto financial services provider. And very specifically, this year, we have launched a RWA sub-brand called Matrixstock. And our first product is on-chain treasury token called STBT. So we have enjoyed the journey so far, and would like to share with what we have thought about this industry and this particular sector and the potentials with the fellow speakers.
Terrific. And Richard, do you want to tell us about Huma Finance?
Yeah. I'm Richard Liu, co-founder and co-CEO of Huma Finance. And we are a generic real-world asset protocol. We build in such a way that we can support all kinds of use cases, but we focus on private credit, particularly about receivables for different fintech companies use their borrow against their receivables.
Terrific. And Nathan, do you want to tell us about Ondo Finance?
Definitely. My name is Nathan Allman. I'm the founder and CEO of Ondo Finance. We're focused very broadly on securities tokenization with a special emphasis right now on cash equivalents, so short-term treasuries, money market funds, assets that are low risk, high quality, yield-bearing substitutes to stablecoins. We also have an arm of our business where we focus on protocol incubation. We think that compatibility with on-chain finance, effectively DeFi, is one of the main purposes for asset tokenization in the first place. So we built Flux Finance, which is basically a treasuries repo marketplace on-chain to demonstrate some of that utility.
Yeah, so there's, of course, Flux Finance. And Eugene, tell us about OpenEden.
Hey, hi guys. Co-founder of OpenEden. We built the first tokenized vault to bring off-chain treasury bills on-chain that settles 24/7. We combine that streaming ability of our vault with an established fund structure in a bankruptcy remote SPV that caters to crypto native customers. Our customers include DAO, treasuries, stablecoin issuers, startup companies, anyone who potentially want to diversify into a cash equivalent product. And thank you.
Okay, awesome. And now that we've got the quick introductions out the way, there are, of course, the field of real-world assets is immensely large, and there are different subsectors within that. And it seems like each of you focuses on perhaps a different sector. There's, of course, some overlap. But to begin with, why don't we just start with which real-world asset are you each focusing on, and what are the benefits of doing this on-chain? So I know this is going to be sort of basic for a lot of people here, but I think it's worth outlining for the audience. So maybe, Eugene, do you want to start?
Yeah, I guess, with us, it's tokenization is not a new concept. Tokenization has been around for quite a while now, but I guess it's the environment that we're in. And the analogy I give to people is, you're pets.com, which is a great idea, but it's not the right place, right time for a product like that. I think the real benefit is really cutting through, and I think my peers here would agree, is cutting through the number of intermediaries and streamlining the process of tokenization. And that's going to cut down transaction costs. It's going to create efficiencies. And that's really the beauty of blockchain. You can use smart contracts, blockchain for KYC, AML. You can use it for tokenizing. The second really is democratizing access. With tokenization, for private credit, imagine this, a Vietnamese fishing pond tokenized and selling that to somebody in London, UK. I mean, that's possible with tokenization. And the third thing, transparency. I mean, with a tokenized product, you do not have to trust your Goldman Sachs or HSBC banking statement just because they tell you that you have X amount of dollars. And there's obviously a lot of shadow banking in today's market, but tokenization is a source of truth on the ledger that you can actually verify. So those are the clear and benefits of tokenization of real world assets.
Very good. So I'm hearing cost reduction, efficiencies, cutting out middlemen. Richard, you do, of course, a slightly different asset class among real-world assets. Do you notice anything different? Like, is there a reason you chose that asset class and maybe some different benefits that you've noticed, or would you say it's broadly consistent?
Yeah, I would say we focus on private credit, particular receivables. Think about almost all the fintech companies or supply chain companies. They have receivables. Meanwhile, they also need working capital or operational capital. Where do they get it? And in real world, a lot of them, they do supply chain financing, receivable financing. But especially if you are working for emerging technology, especially today, you look at our company, ARF, our partner. They enable all the cross-border remittance companies to achieve instant settlement. That's what blockchain does its best. But even they have difficulty to get a lot of liquidities, but this is a very, very high quality receivables. If you can tokenize the receivables with all the benefits that Eugene already mentioned, that you will enable them to access a lot of global capital from different parts, and you were able to enable these new emerging fintech companies to grow a lot faster and enable new innovations. So we feel very, very excited about receivables of private credit. The market is huge, 1.5 trillion, and the value creation is very, very high. Every loan originated to a business is enable that business to go faster, drive the world forward. Feel excited for it.
Okay. Very good. I think great points there. Nathan, you guys with Ondo and building Flux protocol have really taken advantage of interoperability. That's something that we haven't quite touched on yet, but would you say that's one of the other, I guess, important aspects of doing this on chain? You know, you can permeate the real-world assets or at least use them to collateralize other DeFi protocols.
Definitely. That's a huge focus for us. You know, as Eugene mentioned, securities tokenization has been around for a long time. I mean, there was a big push in 2018 for STOs, and I think until pretty recently, it's been kind of a lot of innovation theater. I mean, necessarily as a stepping stone, but you know, it's been a practice of investors taking delivery of some asset, some security on a blockchain, holding it to maturity, not doing anything with it. Like, yeah, great, we tokenized it. So, you know, there's really two main practical benefits that we've identified for tokenization. You know, one is 24/7 global peer-to-peer transferability on a real-time basis. I think that's mostly only valuable for money-like assets, for cash equivalents. I mean, there's demonstrated demand from stablecoins for that benefit, but I don't think for Apple stock or private credit or something like that, you know, we need that 24/7 global transferability. So the other main benefit that I see is, you know, use in DeFi, which mostly means using tokenized assets as collateral for lending protocols, derivatives protocols, et cetera. And, you know, I think the best collateral for those sorts of activities is collateral that's highly liquid. And so because of that, we're pretty focused on public securities as, you know, the next big items in our roadmap.
Yeah. Yep. No, I think very good points. Cynthia, it hasn't been smoothly digested throughout the traditional finance world, the idea of tokenizing and putting assets on the blockchain. And so there are counter-arguments. What are the counter-arguments that you typically might hear from people in traditional finance circles around, you know, there's often rolled eyes. Why do we need a blockchain for this? How would you characterize or describe those counter-arguments against putting these assets on chain?
Yeah, I think tokenization is a it's a means to the ends, right? The ends is, like Eugene said, is the enhancement of efficiency, right? Lower the cost of issuing that asset and lower the cost of circulating, distributing that asset, and also enhance the underlying transparency of that asset, right? Because now you can bring in real-time or daily proof of reserve by third party to verify the underlying, the tokenization asset match the underlying. So I think there's a lot of benefit of bringing the asset on chain. And also, I think what we've been building in the past few years in DeFi is actually a more seamless, interoperable financial infrastructure. And that's, I guess, my personal belief is that this financial infrastructure in the coming years is going to very much disrupt and replace the incumbent financial infrastructure because it's lower cost, it is more open and more inclusive. So I think what's needed on this blockchain, on this network, is more diverse asset and the high quality asset. Currently, we already have a lot of native assets being traded and being transferred on in this financial infrastructure. But if we can bring in a lot of high quality and diverse assets from the real world by tokenization, I think the power to unleash the potential of our current financial infrastructure is going to be much more powerful.
Okay, so enhanced liquidity, permeating kind of on a global network. Okay, that makes a lot of sense. There are, of course, challenges in the way we currently do things, though. So it's not necessarily easy to tokenize assets. Despite the large proliferation of T-bills on chain, I'm sure there was a lot of sweat and blood that went into that. So what are some of the challenges that came up as you were putting these assets on chain? Were there any that were expected, unexpected, and what other barriers, I guess, beyond that are you currently facing? Maybe Nathan, do you want to take that to start?
Sure. Yeah. I mean, I think the biggest challenge that the whole securities tokenization space faces is liquidity. I think a lot of that stems from the asset choice that a lot have focused on, which are generally pretty illiquid assets. I think there's also a big cost in recreating liquidity in tokens that wrap assets that are already very highly liquid. And that's a little bit awkward. So we're working on some solutions that will bring traditional market liquidity from traditional exchanges on chain in a more native way. There's also challenges around how market intermediaries, like broker dealers, for instance, can deal with tokenized securities. And so that's really left a lot of the utility in the more DeFi native land where legally we're talking about peer-to-peer transfers and where those sorts of intermediaries aren't required. But for a lot of financial market activities, we do need those intermediaries.
Mm-hmm. Mm-hmm. And of course, differentiation is one of the keys in startup land. So perhaps what is one of the ways that you've tried to differentiate your products? And I'll throw that out to any of you, maybe Richard or Cynthia.
Yeah,
I would say, especially in the private credit sector, that some players get in, first build as the trailblazers, build more like a protocol, purely focus on platform, but underlying you're supporting fintechs that are always the risk associated with it. Mm-hmm. Then the question is, if you purely building protocol and you feel you're a technology provider, but at the end, if anybody who does underwriting on top of your service does not really, with some kind of default, then the entire platform will get hammered and actually hammer the entire ecosystem. So we actually put a lot of emphasis on both on platform and also put the underwriting disciplines. Make sure we really understand the receivables, the quantities, the duration, only bring the very best assets on chain. And ourselves, we have about 59 data points to try to do the underwriting, set up clear discipline and processes to do it. We actually really want to not only open source all our protocol, we actually plan to open source our underwriting process and the documentation templates so that we can help the entire ecosystem so that we all reduce the chance of default or failures. Because we're all in this space. Honestly, your success is my success. My failure is also your failure. Anybody fail, actually hammer the entire ecosystem. Everybody's success actually enable each one of us become more successful. So that's why really very keen for us to share the tips and experience how to work together.
Okay.
Yeah.
Very, very interesting difference.
Yeah, I think we try to differentiate in two ways. I'd rather say we're trying to address two pain points. Right. The first one, of course, is underlying transparency because people want to know that the token SCBT is fully backed by the reserve, which is repo and short-term treasury bill. So we try to provide the very timely third-party verified transparency through the work with Chainlink Proof of Reserve. So the third party come to verify us and being able to publish the data on chain on daily basis. Therefore, we solve the transparency issue. The second one is probably harder to solve, which is, I would rather say more costly to solve, is to build a deep on-chain liquidity, which provides instantaneous liquidity when people want to get in and out of the position. When Treasury bill is traded in TradFi market, it settles T+1, and is only traded in US business days for this many hours. People is fine with that. But once you tokenize it and you want to integrate it in on-chain with various DeFi protocols, people would expect instantaneous liquidity 24/7. So you suddenly have a higher requirement to match.
Yep.
And then, but that's a challenge, and also the beauty of bringing tokenized asset on chain. So that's exactly the challenge we all need to solve together as an industry. Yeah.
Very good points. Well, I was going to say, in terms of other challenges you've faced, there's challenges like legal, it might be business development, finding partners, infrastructure, so accessing on and off ramps. Maybe Eugene, what are some of the challenges that you noticed, in building OpenEden and getting the first product out?
Yeah, I think I want to address the liquidity part that I think Nate and I think to a certain point Cynthia mentioned. I think for us, we've been spending many months building a natively made vault that allows users to mint and redeem TBU tokens 24/7 on-chain, assessing, market liquidity off-chain. That may come across as simple. A lot of people say, hey, tokenizing is easy, but no, it's bloody challenging. I'm sure everyone here sympathize and empathize. It's integrating with your off-chain service providers. It's education, educating, what are smart contracts? Smart contracts are not smart. Recode it. So we spend a lot of time calibrating the independence, the price integrity, the oversight, and that really creates multiple flow of challenges just to stream a product, right? If you think about it, if streaming an assets is so simple, like peer-to-peer, why hasn't NASDAQ offer 24/5 or even 24/7 trading of Teslas and stocks? It's very challenging. So that's really one, right? One aspect to building a product like us. The second is really, we're trying to bring these new technologies like smart contracts, like the blockchain, the ledger, soul-bound NFTs, into established regulatory frameworks. And I think there's a lot of education with respect to educating, whether is it the regulators or whether is it the service providers, the banking partners. And that's a challenge because, in today's environment, as you guys may know, we're not necessarily in a very positive environment. Let's be honest, it's a bear market and there's a lot of negativity around the space. And we are on this up here challenge to educate them on the merits of tokenization. And so my personal belief is education is such an important thing that we all are facing. Every single day we are educating.
We're not in a positive environment? I'm kidding. So T-bills have been a really popular asset to tokenize this year, probably the most successful trend we've seen in the RWA space. But what do you think is going to be next? There's different characteristics that might make other assets suitable, but as you look ahead, what do you think is kind of on the frontier? Do you want to take it, Nathan, or?
Sure. I think I touched on it a little bit in one of my previous answers. We're very focused on public securities that have deep liquidity already and that make ideal collateral for on-chain financial applications and derivatives.
So you could potentially be borrowing against Apple stock or Tesla stock in the near future.
Yeah. I think DeFi is some of the coolest technology that we have in crypto. It's been applied in very reflexive, crypto speculative centered ways.
Yeah.
But take Compound V2 for instance. It's a true peer-to-pool lending model where if you pledge collateral, that can actually be relent out and you get past, the vast majority of that yield. Very analogous to securities lending traditionally, where if you're holding securities at a brokerage in a margin account, you're not typically getting past much or any of that yield onto you because there are a ton of intermediaries in the lend borrow chain between cash lenders, so like money market funds and borrowers at brokerages. So we're very focused on taking that sort of technology and helping it grow up a little bit in sort of more compliant ways and making it compatible with securities.
Yep, that makes sense. What about supply chains? That's something that comes up quite a bit. Is that on your mind, Richard?
No, for us, we focus more on private credit for crypto forward fintechs. So let me go a little bit deeper. What do I mean by that? So you think about some of the fintechs, they leverage blockchain, provide better product that traditional Web2 TradFi unable to provide. That is such as I mentioned earlier, ARF does the cross-border remittance instant settlement. Or some other things, you have Web3 companies need to access TradFi products such as business card, credit card, and they don't have access. Then some companies enable them using their stablecoin as backing for them to borrow, get credit card so that they can engage in real life. We are mostly excited about those companies who leverage blockchain at its best. And those companies, we believe we can structure the finance in such a way, make it high collateralized and with the quality to be very high. I think that's the best way for us to focus at this moment.
Okay, very good point. In terms of the catalysts that are actually going to grow this space from here, what's really needed? What's kind of missing? And is there anything that you see that would grow this 10x? Cynthia, as you look out, is there anything that you think is kind of required or necessary to really supercharge the growth here?
Yes, I think it goes back to the infrastructural support. This is a new asset class on chain, so compared to the native tokens, there need to be different considerations that put in place to support the real world asset, considering its on-chain liquidity situation and also its very deep off-chain liquidity. Yep. So for example, just to give an example, price oracles, right? For us to create more use cases for STBT in the DeFi ecosystem, we want it to be used as lending collateral as a collateral for trading on the exchanges, on central exchanges and decentralized exchanges. And in many of that integrations would require a reliable price oracle to support. So I think those infrastructures, of course, I think each of us has been pushing the boundary and try to work with the service providers to make the tokenized RWA asset more usable, right, in the DeFi ecosystem.
That makes a lot of sense. What about you, Eugene?
Well, I really think it's I'll take this to my previous answer. I think it's still education. I think there's still a lot of misnomer, like for some DeFi is permissionless, no KYC. To some is it's peer-to-peer. I think it's a lot of education. I think to Cynthia's point, I think the infrastructure is still very nascent. For example, imagine this, right? Recently we opened a bank account. It took us like many months. I'm sure as a crypto native company,
Is on-ramp something then that kind of stands out for you?
Yeah, and imagine this, if you have think of this, right? If I think Cynthia, Nate, we do whitelisting for some of our products. Imagine this, if we can, build a soulbound NFT with ZK Sync, a layer of that, and allow, our users, our wallets to simply, interact with any other issuers. So it's akin to opening with one bank in a real world and having access to the dozens of banks, and that really allows anyone to equalize that that whole permissionless DeFi landscape that I think all of us are super excited. I think that's also the point about the maturity of the infrastructure that's missing, the oracles, the ZK Syncs, the different level of KYC and AML that is required to support this ecosystem. Until that's ready, I think we're going to be, slowly moving towards that critical mass. I think we're still so early, we're still like maybe a year away from critical mass. And I think that like stable coins when it started, it's sort of small, but over years they get the maturity and the understanding, and the user starts understanding what they are. And I think we're at that stage.
Very good point. In terms of stablecoins at the moment, we've got about 140 billion in circulation. Most of that is US dollar denominated stablecoins. Do you think that the future of RWAs on chain, so real world assets on chain and tokenization, is this going to be dollarized, or is there room for other currencies? And is there any disagreement here? Is anyone who thinks it will be, and anyone who thinks it, wants to take the against bet?
I can give it a try.
You
I
go
think
first, Cynthia.
if we have a lot of real world assets tokenized on chain, and I think that actually open the room for local currency stablecoin to grow.
Yeah.
The reason I say that is because once the asset goes very localized, for example, the Vietnamese motor loan, let's say, right? How many US based dollar-based investor are going to understand that market, that asset? Probably not many. But a lot of local investors might be very familiar with the risks, right? With the credit risk, with the counterparty risk, understand yield, and they're willing to invest with their local currency. So they actually create an opportunity value for the local, to give a use case for local currency stablecoin.
So there is room.
Yes, I think the more local the asset class can go to, the more room for the local currency stablecoin to grow. And this kind of grow hand in hand.
That makes sense. Local assets, local subject matter expertise.
Yeah.
Nathan, do you see it differently, or do you see it the same way?
I don't really have a strong opinion, honestly. I mean, we're responsive to investor demand, and we haven't seen demand for anything other than,
US dollar.
backed, stablecoin-like instruments. I mean, there's a lot of theoretical work around, using DeFi for, FX markets, but I think we're pretty far away from seeing any of that get to commercially interesting scale.
Yeah.
Yeah, I mean, just the low-hanging fruit, I think overwhelmingly for us in the securities tokenization space is in, offering superior alternatives to the existing, as you mentioned, very large market of stable coins with, pretty material hidden, structural legal risks and, no yield passed to their users. So, we're pretty centrally focused on that for a while.
Makes a lot of sense. With the last couple of minutes we've got left, maybe another question. A lot of DeFi hinges on permissionlessness. And of course, as we start to touch the real world, there are legal consequences and also other considerations. You might have to deal with institutions who need KYC or AML. But at the same time, you want to balance this with composability. Do you see that the future of RWAs on chain needs to be permissionless or permissioned, or is it going to be a hybrid of both? Maybe Nathan, do you want to start with that one?
Yeah, I mean, permissionlessness has certainly been a big part of the history of crypto and DeFi. I mean, I see a future of on-chain finance that is not very permissionless. I think there are, narrow exemptions here and there. I mean, with our latest product, for instance, USDY, USD Yield, it's a tokenized bearer note that's secured by treasuries, and we follow very specific but narrow regulatory exemptions that allow us to issue this asset in a form where it can trade on chain to investors who are not necessarily onboarded with Ondo, but that's certainly not how I see most securities tokenization going. I do think there's a lot of interesting work being done in kind of privacy preserving qualification checking, like proof via shared credentials via KYC of non-US personhood, of accredited investor status, et cetera. So we're excited by some of that stuff as well. But yeah, I think we're more focused on interoperability, composability, money Lego-ness, one-click movement from one application to another, financial value shared on a base layer instead of at the application layer, and adapting that to meet regulatory requirements of securities.
Makes a lot of sense.
Yeah, I agree with Nathan. I think DeFi, in my opinion, is infrastructure. So infrastructure should cater to different use cases. So the permission, it should be offer a varied levels of permissionless.
Based on the user and their
use
kind of
case.
needs. Yeah.
Exactly.
Yeah. What we see, because we deal with business across the world, and virtually everybody tell us, my local, for me to get it on, I need to know where the money from, because my local government requires me to provide such information. So we say RWA will be, except some special categories, will be permissioned from both lender and the borrower side. I think that will be a key differentiating from whatever established today's DeFi, which is a subsector of the future DeFi. And with RWA, that will have that KYC, QIB will be a key indicator.
Okay, interesting. So it sounds like we see a hybrid future, but RWAs perhaps have their own sort of specific needs relative to other assets in DeFi. Well, I think that's a good note to end on. So thank you all for participating. Thank you to the audience. And yeah, I think we can wrap it up there. So thanks, Cynthia,
Thank you.
Richard, Nathan, Eugene.
Thank you.
Terrific.
Thank you.
Thank you, Sid.
Thank you, guys.